All right, folks, back to work. Boy, fantastic job today. What a fun day to be a trader. And we have one more day left to make some more money on Friday morning. And wow, do we have a fight breaking out right now. 24 hours ago, it looked like these bears had this thing all wrapped up, but no. Buyers were not done kicking. Buyers taking over a bit of the momentum. Now we have a very interesting scenario setting up for Friday, a two-sided market on Friday. We have, boy, a lot to cover in what might be the most important video of the week. Plenty of ways to make money tomorrow, plenty of trades on my radar for tomorrow. I'm going to cover the entire game plan tonight. By the time we're done tonight, as always, you'll have an easy roadmap to make some money on Friday morning as well. So charts are ready to go. Enough of the intro. Let's go find some more winning trades to finish up the week tomorrow morning. S&P and SPY's all ready to go. Here, as you can see, NASDAQ, triple Qs are all ready as well. 3 clues on the charts right now that are telling us where I think the winning trades are waiting for tomorrow. One of those big clues is right here on these hourly time frames. You can easily see the buyers have reclaimed a lot of the momentum that we talked about they lost in last night's video, but it's very easy to see right now. We are right at overhead resistance of the S&P and SPY, overhead resistance on the NASDAQ, triple Qs. You can assume right now that sellers are going to try to whack this thing back down off those highs. And I would imagine, based on what we've seen the last couple days here, I would imagine that buyers are going to pick up those whacks back down and try to run these things back up into these ranges up overhead. So two-sided market that gives us plenty of opportunities for tomorrow, but that's only one of 3 clues on my charts here right now. I have 2, I think probably more important clues on some faster time frames, some tick charts. We're going to grab those tick charts in just a moment and talk about entries for tomorrow. Before we do that though, 3 things on my mind for tomorrow's session. First things first, PMI number is probably the biggest news of the day tomorrow, 9:45. Be aware of that. Second thing, consumer sentiment at 10 o'clock Eastern time. Combine that together. That 9:45 to 10 o'clock block might have a bit of a punch to it tomorrow morning. The third thing, and one of the most important things, tomorrow's a Friday. My mindset, my strategy on a Friday morning is I'm going to get in as early as I can when I'm at my best and the markets are liquid. And I always try to leave a runner on Friday afternoons. Go back and look at last Friday and you will see for yourself about half of all the Friday, about 50% of the Fridays, they love to run. A well-placed runner on a Friday afternoon can make your entire week. So be aware of that PMI number, consumer sentiment number, and Friday mindset early in when the getting's good, and leave those runners in the afternoons. Now, let's get back to our charts though, because we all know the money is made, at least hopefully you do by now, the money is made on the charts here. We'll go to the NASDAQ in a moment. Let's grab S&P first here. I mentioned earlier, right? Bullish overall with that big run back down. The bears keep pounding it, going lower. But I'll tell you, these buyers today, they showed remarkable resilience, buying all the dips. I mentioned earlier, a lot of resistance right now overhead. Assume these bears are going to knock this price down and be ready for the buyers coming back in and making our way back up into that range as a magnet up overhead. If you watched the videos all week this week, this of course is a bit of a recap there from earlier on in the week. Let's go drill down to our tick charts though. Tick charts, see, tick charts are based on volume, transactions. I think they make entry patterns, entry timing a lot easier. By the way, guys, all the time frames you'll need are in the upper left-hand corner there. That's a 7,000 tick chart. And if you're watching for the first time right now, that, my friends, is the 21 EMA. It's pretty much the only indicator we need to find lots of winning trades each week. There are 2, I think, probably more important clues right now on these tick charts. One big clue is we got 2 ranges on the chart right now. Range, it's actually 3 ranges. Range right there, range right there, range right there. Now, why is that important? Well, because the most recent range, remember, recency is always very important. The most recent range is always a magnet. The previous ranges are useful for breakout pullbacks, right? Breakout pullbacks, breakout pullbacks. The most recent range is the magnet. Previous ranges are used for breakout pullback. You see back yesterday, right? That range right there, breakout pullback. They love to break out to previous ranges. That's one very important clue here on these tick charts. The second clue in the tick charts, though, is this nice wide bull channel. Combine that with that overhead resistance level we saw on the higher time frame. It's easy to think that we might get whacked off that high, only to have the buyers pick up the pieces and run this thing back higher. So put these clues together right now. We got a mixed market there in the 60-minute time frame. We got multiple ranges on the tick chart and that big wide channel we see right now. Knowing that, I have 4 trades on my mind on the S&P and SPY, and I have 3 bonus trades we'll talk about towards the end of this video. We'll cover those on the NASDAQ. Trade number 1, my favorite trade here for tomorrow, is a breakout pullback. I would love to combine that large channel along with that prior trading range. I mentioned earlier that this new range is the magnet, right? That's the magnet. So I'd love to get a breakout pullback off of that previous trading range and that channel. Now, as we saw today, things could get a bit wild tomorrow as well. So remember, as we pull back right now, I have no interest in picking the bottom on this. It could be here, I don't know. All I know is that once we pull back down here, this is a horrible spot to be a seller. So because of that, if it's not a good spot to be a seller, it's a great place for a bear trap. Now, my favorite type of bear trap is it's 1 try for the bears, 2 try for the bears. We saw a great example of that this morning in our trade room. Run those stops, trap in those sellers, and squeeze those stops running higher. Now, we know the market now wants to go back up and take out that high. An easy way to make more money is to add to your winners. Look for an add-on trade, which is a technical bear trap pattern. It's a higher high in price, move right below that low. Remember, on these add-on entries, I want to get separation off that moving average. I want to see a higher high in price. I want to go right below that low. Nice strong green candle closing above that 21 EMA. That's a failure into a bear trap combination. It's ultimately a breakout pullback off that previous trading range. That's 1 of 4 trades I'm watching for tomorrow. A second trade for tomorrow. We oftentimes see a strong run down. We oftentimes get a beautiful bear trap and squeeze that sucker back up. But oftentimes the strength of that move going lower, combine the underbelly of that range, and we make another run going lower. We saw a great example of that this morning, right? Where it went down, squeezed the bears, pop it up, did it again, did it 3 times this morning. These double bottom retests, we talk a lot about these on these videos. These double bottom retests are another easy way at a second bite at the apple. Remember, this failure pattern will be a winning trade. We'll move that stop up to our point of entry, right? It's a winning trade. But then whatever happens here, the bears come back in, they whack it back down again. Now, anybody who sells up here, they're going to be buying their way out right here, right? So sellers up here become profit-taking buyers down here. Is this a good place to sell? Please say no. Please say no. No, it's not a good place to sell. It's a great place then for a bear trap. And again, that same failure, 2 tries. Why 2 tries? Because I want to trap in those bears, squeeze those stops. The market now wants to go back up and take out that high. As it makes its way back up to retest that high, I'm looking for another one of those technical bear trap patterns we teach inside the free video course. And again, leave that runner. I want some off at that high. I want some off at that big high, right? And leave that runner. A third trade I'm watching for tomorrow. We oftentimes don't get that perfect failure pattern off that low. A lot of times we'll run down, we'll V bottom off that low and begin to grind and go higher. Now, the hardest part about these is that you don't get a good entry signal down here. And that little voice in your head is going to say, chase it and get in. You do not want to chase these and get in. Watch closely here. I'm going to draw a trend line off the highs. I'm going to bring that trend line down off that low. I'm going to look left and find one of these prior swings, and I want to grab that first test. That first test is the best test off the low of that channel. Now, this could be any of the entry patterns you guys are learning in the free video course. I love traps. It could be a failure pattern, a pullback combo, maybe a strength trade, depending on the situation. For tomorrow, if you've gone through my free video classes, you know what those all look like. So the third trade of 4 for tomorrow is a V bottom reversal. The key is don't chase it as it goes higher. Try to buy as low as I possibly can. Now, I want to talk about one more trade because you know what? We may not get that big move down. This thing may keep on rolling higher here overnight. I have one more trade to talk about if we do make that run going higher. Before we do that though, let's slow down for a moment because I know that most of you folks watching right now, you know these patterns already. You're making money with traps and failures and breakout pullbacks. But if you're here for the first time right now, this might be way over your head, a brand new language, a brand new strategy. Don't you worry though. I teach this entire roadmap, the entire system, the entire setups. I have hundreds of examples, a ton of examples of traps, failures. Guys, I teach so much more of this in our free video classes. I'll put a link up top here for you, upper right-hand corner. Grab that link that popped up there and take that free trading course because the strategy I teach in that short video series will teach you a simple trick we use in our members trade room that tells us where the winning trades are going to be each day. More importantly, I want to teach you my 4 favorite entry patterns, help you time better entries, start making a lot more money. Guys, the markets are way too good right now not to be making consistent profits. So if you're tired of missing the best entries, if you've lost your confidence in your current indicators, your current strategy, again, hit that link that popped up there. Take that free trading course. Everyone loves all the trade examples I share in that short video series. The best part is it's 100% free for you. Also, too, keep in mind, guys, I'm going to put all the important links you'll need in the description of the YouTube video. I'll definitely put the free video class links down there. Everyone loves the free video course. And also keep in mind, too, the place to be every day is in our trade room, 8 o'clock Eastern time. I'm going to put all the trade room membership links there for you. And keep in mind too, folks, I post a ton of charts, videos, mindset stuff on Twitter X. If you're on Twitter X, give me a follow. Again, all the details, everything you'll need to learn more and hopefully earn a lot more is linked up in the description of this YouTube video. So where did we leave off? I talked about that breakout pullback right off of that previous channel. I gave us some variations I'm watching for tomorrow. And don't forget, I have some bonus trades on the NASDAQ. We'll talk about that in a moment because I'm sure you're wondering right now, how could I sell this going lower? How could I short this thing going lower? I'm going to cover that a bit later on in the video. First things first though, this range right here. If you've taken my free video classes, you know that ranges love to rotate. What if this thing pulls back, whether or not we get the entry down here or not, and then rips and runs higher? What's the game plan if this thing keeps on going higher? I'm glad you asked. Remember now, anytime we see a range breakout, we look for a breakout pullback. Now, breakout pullbacks, they sound very easy, but there's 2 specific types of trades I look for when it comes to a breakout pullback. First of all, as we start going higher, remember separation equals strength. When I separate off that moving average, that tells me now separation, higher high, I can buy those bear traps on the way going higher. Once we break out of that trading range, I'm going to use the size of the breakout leg as a measuring leg. I'll look for that bear trap going higher. Then the target is a measured move going higher. The size of the breakout leg is a measuring leg, okay? So as we break out, and again, this could be now or it could be later after it rotates going higher. I don't have a crystal ball for tomorrow. What I do know though is whether we go now going higher or we rotate then going higher, if I get above that range and I start seeing that separation off the moving average, higher high in price, it's a classic bear trap setup. Look for that strong green candle closing above that 21 EMA. And again, a measured move, right? Up, going higher. Okay, once we get that measured move now, I stop buying now, right? Not buying high anymore. Now we look for a breakout pullback. Now, breakout pullbacks are 2-legged pullbacks. 1, 2. Think about a measured move. My favorites are the ones go a little bit too far, a little bit more than that 100% extension. The goal is to get that strong breakout and then try to use what was resistance, use that now as support on the opposite side. Now, as always, I'm not going to pick a bottom on this. I'm not going to blindly buy this. What I'll do is now, with all of that momentum going higher, the odds are very good now. We go back to retest that high, trap those bears in once, twice. We don't need divergence. We don't need to read tape. We don't need anything else besides a 21 EMA. Trap those bears in, squeeze those stops. And again, don't forget, where's the market want to go? It wants to go back up to retest that high, add to that winning trade with a technical. I say technical because this is technically a failure pattern right there, like I teach in the free video course. It's a failed reversal, right? A failed reversal. We go lower, the bears try to reverse, they fail. I call this a failure pattern in our free video class and of course every morning in our trade room. That's a failure pattern. Then as we go higher, if you are familiar with price action trading, this is a technical trap. It's a higher high in price. Again, separation off that moving average and a pullback right below that low. Now remember, leave a runner, right? Leave a runner. These Fridays, they love to run. So retesting that high is a good target and then leave a runner into Friday afternoon. Those are 4 trades now. A couple variations there here on the S&P. Now, I want to cover some more variations. I also want to talk about if we go lower. Can I sell this going lower? Can I buy it back up again? Well, let's take a look here. Over on the NASDAQ. NASDAQ and the S&P are pretty similar overall. That big move up into that range. That range, of course, is a big magnet overhead. We had that strong run down with J-Pow last week. The bears retested their low, and the buyers have been trying to run this thing back up into that range ever since. But obviously, the bears here have not been going out without a fight. Buyers have a little bit more momentum now on their side, but it's very obvious to see here right now. We're right into some key areas of resistance. So just like on the S&P, we have to assume now these bears are going to keep trying before they let this thing roll back up into that range overhead. Now, before we go to the tick charts here right now, if you're enjoying this video right now, please help me grow this channel by hitting that like button for me, subscribing, and sharing this link with other trading buddies. Guys, that makes a huge impact on my YouTube channel because I get rewarded every time you like, share, and subscribe. I know we're all busy people these days, and I appreciate you guys spending a couple valuable minutes with me every evening on these videos. So thank you so much for the likes, subscribes, and all of your ongoing support. Now, let's get down to business here and get into those tick charts here. Over on the tick charts right now, again, a 4,000 tick chart now here on the NASDAQ and the same 21 EMA. There are those same 2 ranges. Range right there, range right there. The most recent range is the magnet. The previous range is the breakout pullback. There's that big channel right there. Big channel right there. You can easily see those, right? Okay, so again, we know the bigger picture. 60-minute tells us be prepared for that whack back down again. Now, on the S&P chart, we talked about that move lower, that failure, right? That trap going back higher. We talked about that double bottom retest, right? Okay, I'm not going to cover the exact same thing over once again here. Go back to the S&P chart, and that applies now to the NASDAQ. My big question though is, because obviously this NASDAQ, we're right into major resistance. The NASDAQ definitely not as bullish as the S&P is right now. How would I short this thing going lower? And then how could I buy it back up again? And also too, what if we go higher here? I have another entry pattern I'm watching as we go higher, a variation of that breakout pullback we talked about a moment ago. Now, if this thing drops like a rock, the most important thing will be to sell as high as you can. So if it drops overnight or in the pre-market like it did this morning, or I guess after the opening bell this morning, it's always going to be a bull trap. It's a lower low in price. Remember that separation off the moving average. So not my favorite trade overall, right? But I'm sure some folks will try to give this thing a swing for tomorrow. The short on the way down. I would say probably a half size position, a quarter size position on this, right? On that move going lower. Now, we talked about it earlier. If we get that run down, trapping in here. Well, what if things get really bloody? What if this thing really, really tumbles there overnight? Well, what's the problem? It's not location. This is a great place to be a buyer down here, right? You're right down around those lows. This is a great place to be a buyer, but momentum. Momentum is a big, big problem in this situation. Remember, there's no free lunch. There's two problems to keep in mind: momentum and location. It's always one of these two problems. If you don't know which one it is, you're just not simply, you're ignorant to it right now. There's always going to be a problem. For example, right now, we're very bullish right now. Momentum is very bullish. But is this a good place to buy? No, location is horrible. If I get a big drop going lower, now location is fantastic, but momentum is the problem. There's always going to be a problem. Find which one it is and then trade around it. So how do we do that this time? Well, if I make a run going lower, location's great. Momentum is so strong now, the bears are going to want to pull back, retest that low, and then go back up, right? Anytime we see a strong move down in a bull market, we have to think the bears are going to come in, whack that thing right back down again, take their profit, and then the buyers can expect that run going higher. So if we understand that basic principle about this, as I make it, again, this We'll wait and see what happens tomorrow. If this thing gets rocked back off those 60-minute highs here and runs lower, this is where we look for that crown reversal pattern. It's basically a bear trap. It's one try for the bears. Higher high, two try for the bears. I want to buy as low as I can right now. It's so important you understand this very, very important aspect of momentum. I want to buy as low as I can right now because why? Because as we start going higher, who's waiting up there? Yeah, bears are waiting up there. Why? Because again, momentum is so darn strong. I need to be in the green. I need to have at least that 1-to-1 first target hit. I want to get that stop loss moved up as quickly as I can because you know who's waiting up there? The bears are waiting up there and they're going to want to come in and whack that thing back down again. Now, who knows? They may not, right? It may keep going. And if it does, I'll keep looking for that separation off the moving average, higher high in price, right? Those trap patterns for the entries right there, right? That'd be a great follow-up trade going back up as this range tries to rotate back and forth again. However, though, it's important. Remember, right? There's a good chance here they're going to try to run that thing back down to retest the low. Remember, anytime we see a double bottom like this, it's not a reversal. Not in this situation, it's not. This is a gift to the buyers because anybody who sold up here, they're taking their profit down here. Sellers up here become buyers down here. This is a horrible spot to be a seller, a great place to be a bear trapper. Now, on a retest trade like this, I don't have to worry about the bears so much. Right? The bears already got their money now, right? I don't have to worry about them anymore. Well, I do, but I don't have to worry about them as much as the initial move going lower. There's a chance now to get that bounce back up and take out that high right there. Don't pick the bottom on that. Trap those bears once, twice, trap them right in. We saw a beautiful example of this on the NASDAQ and the S&P today. That failure pattern and, of course, that trap on the way back higher. Now, that trap pattern here, this technical bear trap, I need to get this thing well before we take out that high. All right, I don't be buying right into those highs up there. That's a profit target, right? Back to retest that high right there. That retest that high, that's a profit target, right? Not a place to be buying. And of course, leave a little piece for a runner because Fridays, they love to run. And of course, as you can imagine, if we were to get that run back down again and then whoop right back up again, who knows? We may not get that crown reversal down there. That same V bottom will always apply. Mark off that high, mark off that low, look left, find one of these prior swing lows that lines up around the low of that channel. That is one of my favorite entries, right? First test is the best test, bear trap. failure pattern, any of the entry patterns you guys are learning inside the free video course. Now, I got one more I want to talk about here on the NASDAQ. I appreciate you guys tuning in and watching all the way to the end right now. Earlier on today, we talked about how, what if we get a rotation, right? What if we wind up running going lower, failure pattern, and squeezing running higher? What if it squeezes and runs higher here? It could go lower first. It may not go lower first. It may simply snap and go higher here. If it goes higher like that, I mentioned earlier that separation off the moving average, right? That measured move, right? That two-legged pullback. Okay, same game plan we saw on the S&P. But a lot of times what happens in these scenarios is we get the market grinding higher, right? Grinding higher. If it grinds higher right now, remember, keep drawing those trend lines off the highs, keep finding those new channels, and keep trying to get those first tests off the low of that channel. It could be a trap pattern. A lot of times, right? It'll be a failure pattern, right? The bears will come in, try to short off the bottom of that moving average. Not a good spot, not with all this momentum here for the buyers, right? On this situation, momentum's great and location's good, right? We got momentum on our side and location's good. Great spot to be a buyer. Trap those bears in, that failure into pullback combination. Now remember, leave that runner. One cool thing about these pop and grinds is the pop leg is the measuring leg. Okay, the pop leg is the measuring leg. If we keep grinding higher overnight, once we see the pullback right there, then I know how big the pop leg is. I match it up. That's my target there for tomorrow afternoon. Another variation of these two, we do oftentimes see these. They'll run lower, trap the bears in, squeeze higher, and then start grinding up from there. Same idea, right? Pop it up, find that channel, off the highs, off that low, find those prior swings. Okay, you get the point, right? Grab that first test off that low. Again, pop leg, measuring leg, anchor off that pullback. Again, as always, guys, if you want to make more money, don't trade more often, don't trade more frequently, trade bigger size and get better at leaving your runners. Half the battle is knowing where the market wants to go, and these measured move techniques, I'll tell you, once you learn them, you'll be upset you didn't learn them a year or so ago already. All right, guys, that's the game plan for tomorrow. Gave us some nice, easy breakout pullback trades, some variations for tomorrow. Now, don't forget, tomorrow morning, the place to be in our trade room, 8 o'clock Eastern time. I can't think of any better way to learn to trade than do it with us every morning at the opening bell. As always, folks, I'll put all the important links you'll need to learn more, join our trade room, take our free video classes. As always, any trouble getting access, don't be afraid to call the office or use live chat. Man, oh man, it's been a fantastic week. Got a couple more days left till Thanksgiving next week. So have a fantastic day tomorrow. Hope you learned a bunch tonight. Hope you earned a bunch tomorrow. And hopefully I'll see you trading with us sometime soon as a member of the Morning Trade Room. Folks, be well out there. Be nice to each other. Make some money for me tomorrow. And adios, amigos. Bye for now.